Good afternoon. It is our 3 p.m. I am at Houston, Texas branch. Reason late, so the webinar is conducted in my office. Unlike when I'm in Des Moines office, I always use the studio that Des Moines has, which is a little easier to move around. But this one is I just raised the table, so we'll go with this format today. Today's topic is really interesting because we want to talk about tax genies and the magic person that will bring you ideas and teach you how to do your tax right. So a lot of times, you know how we give business owners guidance on how to file their taxes right. We, in our profession, we can easily go into, things, codes, section 1202, 481A, 163J, and we can confuse people easily with those codes. But what I am doing here is that to bring that genie out and speak in your language. And I want to tell you, before you file your 2024 tax return in 2025 right now, and what you want to pay attention to, what you want to think. I only want you to know the genie. Then when you go to whoever does your tax preparation, and they would know how to work for you. All right, let's get going. So you already see on the screen tax filing guides for business owners. In actuality, there is no way anybody can provide you a guide that covers everything. But if I can provide you some tips and points that imprinted in your mind, you walk away from today's webinar, you're like, I know a couple of things. That's good enough because that's all you need to know. All you need to do as a business owner, you're so good with what you do already. You don't need to be good with what I do, right? You just want to pick the keywords, the buzzword, and then you can speak to other people. Then they know what to do for you. All right, so you know our website, right? I want to show you our website because this is where you can always find us. And we are here. We are here already for 28 years. We're going to be here for another 280 years. So you can rely on this website. Well, as long as internet is still there. Of course, internet is kind of a new thing, right? When I was a kid, there's no such thing about internet. And if someone utter the word of internet, people will be thinking they're mental illness, because what is internet? But now we know it's part of life. And also the YouTube channel, and we, like everything we do right now today, it is going to be deposited into the YouTube channel. We have a lot of videos in there. You literally can find all the videos you wanted. For example, you get audited, you just type in, I got audited. And on that magnifying glasses, it'll pull up everything we say about audit. And if you want to know how to save taxes, it will come in. If you want to know estate taxes, it will come. The only thing is that if you go looking for a boyfriend, girlfriend, forget it. That site not going to give you anything like that. We're just all taxes, all accounting, and it is all just about this area of profession, right? It's a very serious website, so we don't intend to bring you some entertainment in that regard. All right. Let's just kind of understand. I want to brag about our firm in the number sense. You see from 12,000 all the way to 1. The 12,000 represents the clients that we work with nationwide. We also have some clients overseas, but majority of our client is in US. And that number 1, the last number, that is the goal our firm have. And there's only one goal. And our goal is to serve small businesses with our heart and soul. You know, when I say small businesses, let me tell you, the SBA regarding small businesses, as any business who has the revenue, the total revenue, less than 20 million. So for a lot of our clients, they're 1 million, they're 5 million. So you are all small business. But a lot of times, our clients are 200 million. they are still small businesses because they don't use the big business tools to run their business. A lot of our private companies, unlike those public companies on stock market trading, they have a lot of leveragings, they have a lot of financial side of accounting, which is prone to the public companies. But for privately held companies, a lot of times you don't even see much of a loan on there. So their in and out is very clean. Their business is very solid. One day, if these business gets sold, they can sell a lot of value because they're so solid. They're really self-sufficient, can last generations. So with that said, we call those businesses, they are our clients. So we call you small only because you have leveraged very small part of the tools in the financing market. And when you get into the financing market kind of business, they can get really big very fast. But are they solid? Not. And I have not seen any businesses that leverage to that degree is solid. No. And a lot of them fold. One little economy turbulence comes in, they're dead. Just like right now, we're going into a new one, and there will be a lot of business folding, and we will just watch. I'll watch it with you, and I'll bring you up to date. All right, so with that said, this is the 2 book I wrote. I wrote this 2 based on my experiences with the client. So that's why it's called Appointment with Ying at 8 a.m. It's literally so true. All my daytimes activities is involved with appointments. And I normally have at least 6 appointments a day, if it is not 12. Sometimes I have, occasionally during the tax planning time, I have so many appointments. But, during the tax filing time, my appointments start getting easier because I have done all of these planning already. So the strategy has already been implemented. So people are filing their taxes. So that's where, appointment with me, the idea comes from. So I wrote about 8 a.m., that is starting up a business. 10 a.m., that is growing your business. I'm writing 2 p.m. The 2 p.m. is expanding your business. Basically, expanding your business beyond your own reach, beyond your own capacity. So, I just had a client yesterday. We had this meeting, and the client was asking me, because he is in the service industry as well. He is saying that, Ying, I want to know how you expand your business because I want to be like you. You see how people naturally, I don't think my client knew I was writing that book, but they naturally use that word, expanding. That means they knew their business steps are from the starting, growing, expanding. Then my last book in the 4-book series is retiring from your business or repurpose your life. So those are the 4 books I am working on. These 2 is already on Amazon, so I welcome you to get a copy. I would autograph it for you if you want. All right, no responsibility disclaimer. This is just our corporate attorney wanting to make sure you, me, and others, we understand the internet is a free knowledge sharing platform. So whatever you hear, don't count on that. Just as your knowledge base, right? You want to act upon it responsibly, but don't just believe what's on the internet. And I don't do that. When I prepare those webinars, I actually referencing to irs.gov. I referencing to state website. I go to authoritative website like accountings, Journal of Accountancy, those Accounting Today. And these are Thomson Reuters database. So those are accountable, legit database that you go in and you can search knowledge. But don't just go on Google and search something. They may not be right. Too many times I knew people were not saying the right thing. But have we ever said the wrong thing? If we have, that is because our understanding at that time wasn't there. That is understandable. That's why we want you to be responsible for what you learned on the internet, right? So for this webinar, the key consideration, a business owner, you know you must file taxes, right? For your business, for yourself. And you need to understand the scope of services you signed up with the service provider. I particularly put some categories in here because I really want you to understand it is not the same thing. Until you understand that, when you talk to a professional, you know what you are getting from that professional. So tax preparer versus tax strategist or tax planner, they're not the same people. They might be the same people just because this person is amazing. You're lucky to meet one person can do all of that. But majority of the time, you have tax preparer. They're really just really good at getting to know the tax forms, know where the number should go, and know how to file it with the government. And if it is rejected, know how to fix it. They are tax preparer. Tax preparer rely on the information you give to them. They do based on what you give to them. The tax planner, tax strategists are different. They are the people who actually guide you to come up with a data set to give to the tax preparer. The tax preparer, if they get garbage, they have garbage in, garbage out. But if they get gold, gold in, gold out, right? So that strategist is actually a person that really gonna put impact on your bottom line with the preparer. Tax accountant and accountant, what's the difference? Tax accountant are the people who understand how tax form works. For example, if you have research, R&D, tax credit, the tax accountant would be the person that someone qualified you for R&D credit. The tax accountant would come in based on regulation by IRS, interpretation of IRS rulings, and it will calculate how much of your expenses can be converted into tax credit. So that's the tax accountant need to know the rules, need to know how to calculate. It is not your accountant. Your accountant is the one that running your bills, paying your bills, and doing your invoice, making collection, documenting deposit, and making checks, and so the boss can sign and the bills can be paid, right? The accountant referred to be the person who handles the book, income, expense, and mainly on the transaction on the income statement. Now, what is the difference between attorney and a CPA? Or I will add a financial planner. What's the difference? Attorneys are trained on the legal system here in the United States of America. Okay, depends on which state they are. They also have to pass the state bar to be able to practice in that state. So regulations, inside out, top down, that's attorney understanding. So do they understand taxes? If they're specialized in tax practice, yes, they do. And if they're specialized in taxes, they actually can go to tax court for you. CPA is not the people can go to tax court for you unless there's a special registration to get done. CPA are the one trained on the accounting tax side for you. The CPAs can also be focused on accounting or focused on taxes. It doesn't need to be focused on everything, just like attorney. So you can hire an attorney doing your taxes, then you're assuming that your attorney knows how to be a tax accountant, how to be a tax planner, how to be a tax preparer. Because I know you're expecting all of that from that attorney, but in reality, the attorney may not get trained for all these layers of functions in the tax world. CPA, same thing. Not every CPA is trained that way. Some CPAs are just specialized in financial statement issuance, Like I worked at Wells Fargo as vice president controllers for 5 years. So at those 5 years, I didn't touch taxes. What I did was financial statement. So I understand financial statement. I treat allowance for account receivables, and I report to the shareholders and to explain why our quarterly earning this way, that way. So that's accountant, that's CPA, right? Business coach and subject matter consultants. Sometimes you probably met consultants who are specialized in ERC, specialized in government dollar grants. So those are specialized consultants. They are narrowly focused on one type of work. So it is a good people to hire when you have that specific project. Business coach, it is like your guides in your business daily running. The business coach are the one that should walk into your business, know exactly what was not run well. Maybe your HR is handicapped and your business flow is not good. Business coach are typically people that has a lot of experience, like those retired CFO CEOs. They normally take on something like a business coach role, formally or informally. My son had a 10 times consultation coaching activity with the president of Bankers Trust at one time. So those are the high-ranking officials. They have so much business experience. They become business coach and to guide you. So those are more not a dollar, not a tax expert. They are more of business operating. Give you those concepts. Just I want you to understand that when you hire people, then you really need to understand who you are hiring. So a lot of time, I am hired by my client as the tax planner, as a tax strategist, and never as a tax preparer, because I do not do taxes. I actually lays it out, and then there you go. It's almost like I create the mold, then the preparers at our firm get it done, then I look to see whether it fits my mold. If it is fits my mold, that means it's perfect. If it is not, means something was not right. So we have to look at it again. So, and I also serve as a business coach just because I've been in this business for 28 years and I have met so many clients. And I really knew when you want to buy a business, how should you move your step? And when you want to sell your business, how should you move? And when you are running your business down, you want to close it up, I knew what you should do. If you want to grow it up, I also know how you should do, just because that is life experience and it is not something you're going to graduate from university to have. So when you look at a person, knowing what they are capable of, and you subscribe to that skill, if you can do that, it is already half success for you. Because if this is what we call, how to use people properly, right? If they're good at typing, you don't want them to run, you want them to sit there type. And if they're good at running, you don't want to put them in the office. They will be so bored, right? So same thing. When you hire people, when you hire professional, you absolutely need to know what you need. So that is a key consideration. Now, basic tax filing workflow. I want you to understand this is very critical too for business owners. You say, oh, I want to file taxes. What does that mean? You need to go through this workflow to file your taxes. In a perfect business world, business owner would go through the following step to file tax return. Number 1, get financial statement ready. Number 2, with that financial statement, you get your tax plan, your tax strategy put in place. Number 3, and you come up with a year-end adjustment. Based on the strategy, you would come up with a year-end adjustment to your financial statement and give to the accountant, because it is tax strategy. So these are numbers need to reduce income, increase expense, or reduce inventory and increase the cost of goods sold. Whatever the strategy went, you need to adjust your financial statement. Then prepare your taxes. This is where the prepare comes in, right? So in one of our clients' case, the financial statement was produced by internal accountant. the bookkeeper that they have. Then tax planning was done at the last quarter with Community CPA. So we come up with a planning. We knew what we need to do. Then by the end of December, everything we want them to do is already finished. So we give that adjustment to the accountant, book it. So the internal accountant get financial statement done. Now, that financial statement came back to the preparer in our firm. So our firm preparer will use that and do taxes. Then the review tax return comes. That would be against the mode I created, right? The mode the partners, the managers here in our firm created. We knew what that should be. So we compare that to make sure it is okay. It's okay. Then it got filed to the government. In our firm, we have a special person just doing tax filing with the government. So it will goes to her and she send it out. Now, the last step, the internal accountant will use the final tax return plus financial statement, close out the book for the year. That is the workflow. Ladies and gentlemen, if you are saying that, well, I don't do anything, I just go straight to the preparation of tax return with whatever I scratched on the piece of paper. That just, obviously you got by with that, but that's not our recommendation. We really want you to be that perfect business person. I'll tell you that all the clients I met who had run their business really successfully are the people knows how to follow workflows and a stickler to the workflow. Okay, we need financial statement done. And to be at the third quarter end, we can estimate the last quarter. So we want to give financial statement to the tax planner right now. Then we do plan. Then we adjust financials after December. Then we do tax return. This is the workflow. I want you to remember that because it is really important. Nobody talk to you about workflow. They only just tell you that, oh, you can deduct more expenses. Can you just buy another truck? I mean, what is most important is not the truck expense. It is actually the workflow that will get you there. Common business entity types. I want to bring this up because there's a genie in this bottle. Okay, so the common business entity type is the sole proprietors and the 1065 partnership and S corporation and the C corporation. You know that, right? We don't have to spend a lot of time on here. I want to show you the genie in the bottle. So the tax genie in this bottle. Assume the taxable income of the business owner is $100,000. Okay, we assume that we made $100,000 profit. So the genie in this bottle is between your entities. You can, based on your business situation, to change that. You can change the entity type. So for $100,000, from 1040 Schedule C sole proprietorship to partnership, there is a potential of saving of $7,650 in federal tax. Hear me? That's your genie. Then, from partnership to 1120S, which is S corporation, that potential saving of tax dollars, it is $15,300. And from S corporation to C corporation at a certain point of time, that saving is $16,500. Now, if you just say, well, I don't want any of these things. I'm just going to turn my business into a nonprofit. That's fine. We can do that. Then you will save $37,500 taxes. So this is, I'm just trying to impress you with that structure flexibility. Based on your business growth, tax structure can be changed. But your business name and license don't have to. You don't have to worry about, oh, you change my entity type. Then that means I can't use my name anymore. No, that's not true. Everything stays the same. Of course, one thing I want to add to you, the tax genie in this bottle also can help you to avoid tax audit significantly. So, about structure. right? So I have a couple of genies today with each sector I come through, but I want you to have that in mind. I want you to be closing your eyes and think about the structure and know the flexibility. Not only you can switch them, you can also create them when you need it to. Okay, that is your genie, and you have to be a good friend with your genie. Okay. And the two other slides here, I just want to mention to you about the due date. If you have a pass-through entity, remember that is March 17, 2025 due date, okay? I want to remind you. Then if you have your personal and 1120C, that's a C corporation, those are April 15, 2025 due date. So make sure you know, okay? And in the same bottle here, the genie also want to remind you about four most common tax credit: R&D, work opportunity tax credit, and energy efficient commercial building deduction tax credit, and the small employer pension plan setup tax credit. I just want you to know that we don't have a lot of time to go through them, but I don't want you to not remember them. And if you are doing a lot of exporting, in this new administration, exporting is encouraged. If the other country don't put the same treaty on our product, then exporting companies should go really well. And there is another thing for exporting company, which very we don't, we have 12,000 clients, right? We probably have just handful of company actually doing IC disc. That's what I call it. I have here other people calling it IC DISC. They call it like that. I just call it IC disc. I think it's easier for you to hear me and remember. So those are for exporting company, and if you are one, not sure what I am talking about, you can always just come to ask, right? Now, let's talk about financial statement and payroll. That's another genie I want to introduce to you. Under financial statement, there's an income statement, and you want to summarize your business revenue and expenses, right? Balance sheet, where you have your adjustment to income statement coming in. Because on the balance sheet, if you imagine balance sheet are just three basic areas: asset, liability, and equity. Just equal your equity section, kind of envision all of your income tax, all of your income statement kind of smashed into equity, right? Then you have asset and the liability. So the liability is kind of like income because they increase your cash flow. The asset is kind of like your expense because they are reducing your cash flow. Okay, so with that understanding, you understand your asset. If you have a lot of asset, that just means you didn't have a lot of expense. So if you have a higher inventory, you're gonna have less expense. That means your profit will be higher, right? So a lot of times people don't get that. I always tell my client that just forget about the garbage of accounting. I just want you to know that the more inventory you have, the more taxes you pay. How about that? So you understand now, right? Because the more inventory you have, the less cost of goods sold you have, and then the more profit you're gonna make because your expense is less. So the linear relationship between your inventory and your taxes is that the higher of inventory, what? The higher of taxes. What about the higher of asset? Same thing, the higher of taxes. What about the higher of cash on hand? Same thing, the higher of taxes. So anything in asset piece, if it is more, you have a less chance to reduce income, so you pay higher taxes. But what about liability? Liability is acting like income, right? Because they are increasing your bank deposit. You borrowed $100,000 and you deposit $100,000. If your accountant is not smart, they actually add the $100,000 into your income. We have seen that. So the liability is where you can reduce the income, right? So if you got income, but it's supposed to be your liability, then you pull it back into liability. You have less income, then you pay less taxes. So the higher your liability, what? The less taxes you pay. Just so you kind of understand this financial statement thing. There's a genie in here. That's why I'm talking about it. Payroll. Payroll is important too. There's a genie in payroll to help you pay less taxes. So let's look at the genie. Financial statement. That is related to accounting method. Revenue recognition, I touched on a little bit. AR allowance and bad debt. Account receivable write-off. Inventory counting. Documentation organization. These are all the genies inside of financial statement. You really should use every single one of them. On the payroll side, as long as you have payroll, you have 401k plan that you can use. You can develop cash balance plan, take more money out of your profit and put it into cash balance plan. You don't pay taxes. That's your expense. Key employee life insurance. Yeah, you're so important. If you die, this whole thing goes south. You better do key man life insurance. Expenses for the company. Medical insurance, expense. So how much can we save from this genie? Let me go there for you. So example, a real client. He runs a deli store. And his structure is as corporation. He has 2 employees, him and his wife. He came for tax planning service, Remember that workflow? And he got his financial statement. He did that himself. He came for tax planning because he wants to make adjustment. So he wants to file taxes. The taxes he filed, we prepared, matches to the plan we did. Then he files it. So he actually come for the tax planning. Assume each item reduces taxable income by $10,000. I'm making it simple. So assume that my client pays 37.5% on the income tax rate on the 1040 because it's S corp pass through. So the net result went to his 1040. Accounting method. We changed his deli store from accrual to cash because after we talked to him, we realized that this deli store does quite a bit of catering. When the catering job coming in, they got deposits coming in, and then they cater like 2 months later because there's always a time gap. And especially those are coming in a lot of time on the holiday time. So, there is a need to, if they're on accrual, they have to accrue all of the income that come in, but they haven't even, they haven't really provided the service because it's already paid. It's already committed. The PO is already there. So by converting that to cash method, only report income on the cash they received. So we reduced $10,000 taxable income. Inventory counting. They never did any inventory counting, so they carried the same number for almost 5 years on the tax return. Same number. So they thought that number not supposed to change. So with that, and we reduced $10,000. And we reduced inventory. So by the physical count, remember I said the lower the inventory, the lesser of the taxes you pay. The more inventory, the more taxes you pay. So now inventory reduced. Reviewed POS system. What we also did is to review their POS system. We realized that the POS system wasn't really running correctly. And sometimes when they have clients who come in, they bought $40 merchants, but they ask for $50, $10 back, like cash back, then that $50 counted as an income. No, that's not. That's not their income. That is something, that's a liability. They took $10, they need to give it back. So we made those changes. So now on the payroll, we also had him doing $30,000 deferrals on the paycheck because he got a payroll for $60,000 and we took half of it, went to 401k. So on his W-2, now he only paid taxes on the 30, not the 60. Then we also implemented a cash balance plan. So both of them contributed. The company paid $100,000 for them. So what is the total tax saving? The genie did the job. made them $60,000 tax saving. They used to pay taxes every year for about $30,000. Every year they pay taxes 40, 50, and somewhere there. And after this tax planning, after we filed taxes and we matched to the planning and we did all what we did, and he actually got almost $50,000 back, and he saved 60. So with that said, this gives you an idea of why I call it genie, right? You need to plan. You really need to work your business just like how you work with your client. You think that is serious to generate income for yourself? Why is tax planning not serious? It is so serious. All right, depreciation and loan. I brought this out because there's a genie in here too. So depreciation is not some sort of table. Doesn't matter. It matters so much. You want to understand the buzzword. I don't need you to be depreciation genie. You don't have to calculate it. But I want to make sure that you have the receipt for the purchase. And I want to see you have the schedule for the depreciation history. Then same thing with the loan, right? The loan, we want loan agreement. We want to see all these records you have. There is a genie in here. That's why we do this. So that's why when you come to Community CPA, you say, well, I want you to prepare my taxes. Okay? Tax preparation, garbage in, garbage out. If you give me garbage, that's the time we have. You know, during the tax season, everybody is so busy, and you want your record to come in to be ready to go, so we go, right? But if you give us the wrong record, or you give us the record that is not complete, and then this area will be missed, and you don't want to do that, and you want to make sure you get that depreciation record, you get the loan amortization schedule, and make sure that you give that to your tax preparer. The genie in this bottle, depreciation schedule. Do you know that if the depreciation was done wrong, you don't have to amend your taxes? You can just correct it in 2024 while we are doing 2024 tax return. All right? So, you know, that's a section 481A that allows you to do that. But I'm just giving you the idea. You don't need to know the section code. You just need to know that if I make changes to my depreciation, I don't need to go amend it. I can do something just in the current year. Ying said something like that before. That's all you need to know, right? And you want to write off all the assets you don't need, because that could create potential capital gain or loss. Sometimes you need a capital gain. And there's so many times we needed a capital gain to offset the capital loss sitting there forever, right? So you can speed up your depreciation by deploying cost segregation technical process. There's so many things. The genies can play a huge role in this. All right? So I want you to remember that. And the loan, that is also, the genie is also in here. So the loan is not income. So you really want your accountant to get that book done right. And every question, the question about deposit should be there. If you are always just getting thousands income, but suddenly you got 100,000 deposit, don't you want to ask where that money come from? Sometimes this loan can be your equity too. Maybe that is some money your mom gave to you. And you say, oh, that's my loan. I need to pay back my mom, even though she doesn't want it. But you may not have enough basis to deduct your losses if you don't take that in as your own money. So in that case, your tax genie will tell you that forget about your mom. Just treat that as your own money. It is under the gift tax rules and you're okay to take it as your money. It is your equity, so you can deduct your losses. There's so many things that need to be considered. And don't always imagine that your loan interest expense is deductible. No, sometimes it is not. There is a rules related to that. It's 163J. It's not something I'm going to get into it to you, but you need to plan. No kidding. And you cannot assume that's a deduction. Tax genie is serious. He knew what needs to be done. You know, I say is he. Tax genie is a he, right? Maybe it should be she, because I think I'm one. So maybe they're neutral. There are multiple of them. So you can regard me as one. All right. So my next tax genie is the last one in the bottle for your tax season right now. I know when you file taxes, you think about being audited and afraid of being audited, right? So in recent past years, there's audit going on, but it's kind of focused on high net worth individual. So from our clientele standpoint, we have some audit, but definitely not as much as I would say during President Obama's time. You know, in my career time, I have gone through Obama's presidency time. Those are the time actually the tax audit was rampant for small businesses. Just wrong. I don't think that was the way IRS should operate, but that's what they did. And then, you know, with time, it's getting better, and we don't see that kind of audit coming through like rainfall. It doesn't do that for small business, but then it is much more targeted. So sometimes IRS introducing project, so they will do this project and audit in certain areas. So right now with the new administration, is on his way to deregulate a lot of things. So IRS funding was cut during Biden's time by about 20 billion. I wrote 20 million. I think it's, I don't know. You know, millions make sense to me. Billions no longer make sense to me because I have never really had a billion. I don't have clients with billion in 1 year. Let's put it this way. With many hundred millions, multiple 100 millions in a year, but never billion in a year. So Amazon is not my client yet. So I don't know whether it was 20 million cut or was $20 billion cut. Sorry, I wasn't sure about that number anymore. But if you Google IRS funding cut, it will give you the history of how they cut them. So it is definitely going to cut more. And so the audit will be, I would say the audit is still going to exist because they have employees hired for that. So these audit will be more targeted. They would know exactly what they want to target because of the data is getting so good as well for IRS. They can set condition. For example, they will set W-2 as a condition, saying if you make more than 500,000 in W-2 income, then the other condition is that you have a negative AGI. That could catch all the rich who has the one, I wouldn't call them rich, but who had a bigger W-2, but had a negative AGI. So they must have some deduction going on, so that could be a targeted audit, right? There is a increasing audit on business in recent years. So audit prevention is a big deal. The tax genie in this area, it is also can come to protect you. While these are the points I have for you. One, file your tax returns. Get data match done first. Don't just file. File it with a data match result. When I say data match, what does that mean? What I mean by saying data match is that the data you have in your tax return done by the tax preparer, you want that data to be in agreement with IRS data. How do you get there? Is to get IRS data out compared to yours and figure out what is agreeing, what is not agreeing. And we have been practiced to do data match for our client for at least 20 years. I can't count because we have been doing that forever. And you may ask me what story you have. A story? Totally. I have a client, we finished their taxes. So we did a data match. So from IRS database, we found out she has a 1099 interest income for $796,000. She doesn't know because this is the money she loaned to someone, but it's already paid back. So she thought, I loaned money to you, you paid me back. I didn't ask for interest, it's the exactly same amount, so I don't have to report anything. So taxpayer didn't even bother to tell us that. But now we showed her, okay, you got $797,000 interest income. She knew exactly what that is. So she went to the issuer. The issuer happened to be someone who really do not know what they're doing, and said, oh, we didn't know we have to, we didn't know that's what we did. We just thought that we return your money, we have to have a 1099. So that's what they did. Now, Community CPA, we have to help the issuer to issue amendment to IRS to correct that 1099. So once that is corrected, and we pull the data again for our taxpayer to make sure that is gone from IRS record. So we saw it, got amended, become a 0, then we file this person's tax return. Imagine if we didn't. And this person, guess what? Has almost 20 other businesses. You think it's going to be fun? And it will be so much chaotic going on because we have so much money we didn't report, but the IRS think that she got it, and then it will be a chaotic situation. This is the power of data match. You have to do it before you file taxes. Of course, if you get audited, go to Community CPA YouTube channel and watch this video. I put the picture on there for you. I got audited about IRS audit, and I want you to watch the video. And it's not entertainment. I'm just telling you what to do in that video, okay? Be sure to consult with a professional like Community CPA before you answer any questions to your auditor. I say that because sometimes the auditor comes through, you know, the auditor's job to really go through your account and audit you, and they're done. It's their job. And ideally, they would like to find a client has everything they need so they can quickly move forward. The auditor is not there trying to, you know, it's not his journey or mission to make you miserable. They just want things to be easy. They want you to have everything. So if you answer a question that triggers the auditor to open up another chapter of audit, that is your problem, not auditor's problem, because their job workflow says if that answer is a yes, go audit something else. So you cannot put yourself in that situation. Not knowing is actually really bad. You say, oh, I don't know, so I should be forgiven. No such a thing. Oh, I don't speak English, so I don't know what I was doing. No, you're in a country that English is official language. Are you kidding me? And you need to know. So there is no excuses for you not to know something, answer it wrong, then got yourself in more trouble. So for that reason, you want to just get professional to help you, especially if you don't speak English and you don't think you know what you're doing, and rely on someone you can trust. If you have brothers, sisters who you trust, go to them. If you don't want to spend money, don't want to get help, just don't have the money, go for someone that can help you for free. There's also, I don't know about now, but in the past, there's a free places for getting those help, right? Hopefully the government's still funding them, so those organizations still gonna exist for you, for folks who are not able to pay for professional service. I feel for you. One more thing the tax genie would want you to know is to do your tax planning for 2025. There's so much good reason for it, because this administration is not a new administration, it's a repeat administration. There's so much experience coming from the first 4 years, and right now things will change. So with all of these changes, I want you to know that your taxes is at the forefront for all of these changes. So let's say if they do certain budget change, the sources is coming from taxes. So they have to, in the budget, they have to figure out which tax items would make up to that money they needed for something. So with a lot of that going on, and I want to make sure that 2025 is a brand new year for the country and also for taxes. So you want to do your tax return for 2025 year when you get into 2026. The time for the tax planning is from October to December. I'm telling you, my last year's experience, I worked 7 days a week, 9 appointments a day for literally about 3 months time. I was very tired at the end, but I got through. And this is how busy we all are in our firm. I'm not just talking about you, I'm talking about all the other partners. So I want you, if you have never done anything with us and you want to do tax planning, you book it early because you don't have a spot. If you didn't do taxes with us, you're not our regular client, nobody gonna save the spot for you. So make sure that you act early if that is your plan. And on our website, you can go to the partner page, the appointment page. You will see the partners here. So on the taxes side, Song Mo, the number 4, that one is also genius for taxes. He has Genie with him too. I myself, Song, and Kwang also have Genie with her, but she doesn't release her Genies as easy as we do because she's more focused on accounting, payroll, and sales tax. And Dr. Hao, he's the leader of the Genies. So he actually is the one, if we got into certain tax code, we want interpretation to Chinglish. And Dr. Hao actually is the one can turn the whole tax regulations into understandable concept for us. So I rely on him heavily, and I will tell you that the career path I have, the growth of the firm has so much to do with Dr. Hao, and he's truly the genie behind all of these. All right, and the last slide I want to give you is our YouTube channel. And would you please go onto YouTube to find us and subscribe to our channel? The reason I say that for you is when we post topics to talk about, and you would get a notification. You don't have to come for every topic, but at least you register what are the topics we talk about, because what we talk about is what the world wants to know. We don't come up with this topic just because, oh, Ying only know that topic. No, we come up with the topic because there's people asking for it, and then the internet tells us people wants to know that. We do our due diligence in terms of bringing you useful topics. So please join us and subscribe to our channel. And if you have a special topic that is so important to you and you don't want to hire us for specific service, email Catherine and have us come up with a video for you. We will talk about it. If you think it's special, other people think special too. So we will talk about it on our webinar, and we'll give you that knowledge to our YouTube channel to serve you that way. And here, we open 6 days a week, year-round. Not just for the tax season, for the whole year. So on Saturday, you pick up the call, we're around. And I will say that I have not found another CPA firm work like us. We're a workaholic. We're a bunch of work hard people, and we understand responsibilities. So we are especially care about you when you are specially needed help in the special time. So relying on us, and I will see you again on Tuesday. Tuesday, 3 p.m., Saturday, 3 p.m. is my time. And I talk to you, give you what I know at that hour. I'll talk to you again. Bye-bye.